I have made close to $100,000 in profit last month alone, all verifiable on Instagram, and this is what I've learned. You don't need another strategy. You already know what revenge trading is. You already know you should wait for your confirmation. You already know you shouldn't be doing the things that you're doing. You already know you shouldn't be moving your stop loss early. So why do you keep doing it, right? Because every trade feels different. Every chart feels different. Every day you're making decisions based on what you feel instead of following the same process. But until you have a framework, consistency is basically impossible. Okay, that's exactly where I was. I spent years thinking I needed another concept, another entry model, another course maybe. But the problem was not information, guys. It was that I had no order. I didn't know what to look for first. I didn't know what I was looking for in general. I was kind of just guessing. I didn't know what I didn't know what I was doing basically. Okay, so I constantly skip steps, force trades, second guess myself, do things I shouldn't be doing. Everything changed when I stopped trading or treating trading like a collection of concepts or like a collection of knowledge, and actually started learning the right things and executing and looking at what's going on and how to actually execute in these markets. So I'm JD. I've been trading for over 7 years now, and this is the exact framework that I use every single morning. It's the one I've built over my years of trading. I've been full-time for 4 years now. I've been teaching people for free for over a year, making people profitable all over the world. Now, this is the concept or the process that's made me consistently profitable, and today I'm going to be giving you the intro to the JD model. So by the end of the video, you should know exactly how I go from opening the charts to executing a trade, and more importantly, when I decide not to trade as well. Let's start with step 1, trend. The first thing I ask is, do I buy, do I sell? It's what's the higher time frame trend? What does my 4-hour trend say? What does my daily trend say? What does my hourly trend say? Where are we going? Are we going up? Are we going down? What is going on? Are we in a global war where everything's going down? Or are we in a economic kind of, good moment, I'll put it this way, and everything's going up? You have to look at what's going on around you, okay? So if I don't know where the hell we're going in general, I can't even start. So immediately I go to my daily, I look, all right, this is going up, or we've been going down recently. Okay, maybe bearish is the right way, but the past few days we've really been going up. On the 4-hour, we're really bullish. All right, probably longs is the way to go here. We wouldn't want to fight this bullish trend we've got going on here. On the hourly, same thing. We've actually gotten a nice little retrace here. Now we're starting to look bullish again, probably targeting this high. Boom. How long did that take? Next, I asked, what's my draw liquidity? Now, draw liquidity could be equal highs, equal lows, previous daily high, previous daily lows, previous weekly highs, previous weekly lows, any session high lows. It could be a lot of things, okay? Your market, you don't have to guess. Your market will tell you where it wants to go. So if I'm looking at this, right, let's say after you see this, all these candles being printed right here, do you expect your draw liquidity to be here? Or do you think it's higher? It's definitely higher because this thing is drawing towards something, okay? The market will tell you where it wants to go. Just listen to it. Stop being egotistical. Put your whatever the hell you want to put down and look at the market. Where does it look like it wants to go? If I don't know where the market's going, I don't have a trade. It's impossible. Obviously, it's not perfect. There will be discrepancies. There will be mistakes, but that's what trading is. You'll get better at it. Now, daily bias is a mix of trend and drawn liquidity. Let's say I imagine my drawn liquidity is up here. Perfect. There's equal highs right there, right? These equal highs right there, right? I want price to go here. We've just had this move. It looks like we're drawing towards these equal highs. Now, my trend is bullish. My draw is higher. Does that mean I just press buy? No, right? I expect some form of rebalance, break the high, rebalance once more, and then we go. And boom, this would have been a really good entry for a swing trade to go take these highs. But what I'm trying to say by that is you need to wait a little bit still. The rest will come. But once you have your drawn liquidity, once you have your trend, and you have a bias, you're good to go. Now you could go into the next step, location. That's 929 market's about to open. This green line is my drawn liquidity. We just had a nice little market structure shift back to the upside. So our 1-minute trend aligns with our higher time frame trend. We just had a nice sweep here. We're going to wait for price to give us our location. We're going to put down our Fibonacci tool, or it could be an order block or breaker block, could be anything. And we're just going to wait for price to come back into our favor a little bit. So let's do that. All right, so price went back and didn't touch OTE quite yet. We want price to come into either our discount, but at least discount, but OTE is probably best here. So we're going to wait. We're going to be patient here. We're going to let price come to us. Okay, we're patient. That's looking good here, right? This would be pretty decent. If I was to enter this, I'd probably enter it here because we didn't get a candle closure into our location. We didn't get into our OTE. I'd probably go here. If price had entered OTE, I'd probably put my stop below wherever it went, right? So now, if I were to enter here, now you have a decision. Do you want to take the trade that's a 1.585R, which is good? Or do you want to wait and see if we come down, maybe tap the zone and then go, right? Now, obviously, me personally, I probably enter this trade here. The RR is good and it looks really, really good to go to our TP. I always preach on base hits. You don't need to hit 10-hour trades every day. So we're going to enter it, okay? We're going to enter 1, 2, 3 contract, whatever. stop at the low, and then if price ends up coming down, we can always account for it. Let's say my max risk for the day is 5K or 4K, right? Now I'm in 2K here. If price comes down, I can enter another contract. So let's see what it does. So it goes straight. Good. We didn't miss out in the trade. Perfect. Amazing. And now we can kind of just take our time here. Oh, and it does come back right here. Okay, perfect. So price came back right there. I'm going to select bar. I'm going to go back one. I don't know if it's going to cancel the trade. It might. Yeah, it did. Whatever. So once it goes back, I would have added one right there. Why? Because we have our draw liquidity. We have our trend. We know what's going on. Our location did not get breached. We're in OTE. We're wicking it. It's perfect. Candle closes like this. Awesome. We'll go like this, but you could even go down here like we said, right? Keep the risk the same, and we just go boom, just like that. So by entering here, you are pre-firing a little bit, but if the risk is good, there's no reason not to do it, okay? You don't have to be perfect. It's trading. All you have to do is have a good RR and have a good system in place. And then once you collect data on your system and you know it works, just do it, bro. You could enter here, put your stop down here, TP up here. It's 1.85R. Why wouldn't you do it? Even if you go and draw it on, who cares, bro? Even if you get bearish value gaps, who cares, bro? You have your whole framework. You know it works. Just execute. Stop doubting yourself, okay? Now I talked about a liquidity sweep, okay? What that means is that here we had a low, price came down, swept that low, didn't quite get this one here, but did get this one, and then ripped and ended up breaking structure here back to bullish program. Now our sweep is right here. We took liquidity, we took out this low. Anybody that had stop losses here that were long got stopped out, and now boom, it's our time to shine. Right here, I call it a market structure shift. Now, what is that? It's when we were starting to look like we're going to a bearish trend here on our 1 minute, but boom, we break the high. What does that mean? Higher high, higher low, bullish trends are back. We're back bullish. Our 1 minute aligns with everything else. We're happy, we're good, we're proud of us, and we take TP. Now, I want to talk about this Fibonacci that I put here. Why would I put it here? Because that's the leg that broke structure. That's the leg back into the bullish program. Usually it's going to want to get rebalanced into, right? OTE is a great area for it to have really good risk to reward ratios. And also price tends to go back there a lot. It's just like that in life. Those numbers that come up everywhere. I can't explain it super well. I have a whole video actually explaining it very well, but I don't remember it by heart because I had done my research at the time. So yeah, you get your nice low rebalance. Boom, price shoots right through. Nice little 2.64 R. If you put your stop at the low, that's a 3 point something R. But you have to be careful when you put your stop here instead of here, because technically where you put your stop loss is where your trade is invalidated. Okay, it's when your trade idea is no longer valid. Now your trade idea on this trade ID right here is that we're in a bullish program headed to your drawn liquidity. That's literally all it is. Is your trade idea invalidated if price comes down, takes this low, and then goes back? No. It's only really invalidated if you get a candle to close below this low. Now, when that happens, fine, get out of the trade, your trade is invalidated. But a lot of people, what they do is they put their stop here because all they care about is their stupid little RR, and they risk way too much, and price tags them out and goes. No, okay? I put my stop here, and sometimes I trade live for a year. People are not profitable. When price comes down to my stop loss, I'll literally move it or I'll take it out and I'll wait for a candle close. Why? Because wicks do the damage, bodies tell the story. If the body closes through, fine, I was wrong. If the wick only goes through and comes back up, I was not wrong, okay? It's a liquidity sweep. I will not be swept. Now, here's the thing. When you do that, you have to risk accordingly. You can't full port your shit and do that, obviously, okay? You have to risk accordingly. Let's say my maximum daily risk is $500. Maybe my stop loss here will be $400 or $300. And then when price breaks through, I will lose more. It's a part of my risk. I calculated it. Usually I'll call it out even before I enter the trade if I am to do that, because I know what I'm trading, okay? Now, just as important as trading is when not to trade, okay? Now, just because you understand the JD model and the concepts behind it doesn't mean you understand when not to trade it. Now, I personally don't trade on days where there's no clear drawn liquidity or no clear trend. ES and NQ are uncorrelated. NQ and ES, the Nasdaq and the S&P 500 are two correlated assets, meaning they move very similar all the time, basically, okay? But when I come into the market and let's say ES is going slightly up and NQ is going down, I just don't even trade. I'll send a message to the Discord. I'll say, I'm not trading today. I won't even look at the charts. Now, on this day, would it have worked? Probably, but safer than safe, better safe than sorry, and I just don't trade that day. When my drawn liquidity for the day is taken, I don't trade anymore. When I feel like I'm maybe not fully there emotionally, I don't trade. If I feel an ounce of FOMO kicking in, I get off and I don't trade. If price is super choppy, I don't trade. Usually days before NFP or CPI, I try not to trade, or I trade evals only. Because the goal, guys, is not to find a trade every day. The goal is to find a reason not to trade. And the market is basically forcing your hand, saying, hey, look, this looks so good. You have to take me. You have to take me, right? This is what you want. You don't want to be actively looking for trades. You want the market to literally force you into taking the trade. So if there's one thing to take away from this video, guys, it's this: the JD model is not about finding more steps. It's about simplifying it. It's about filtering out bad ones. Knowing the framework is one thing, though. Executing consistently is another thing. This is why I work one-on-one with a small number of traders personally, right? Not to give them more information, obviously. Well, if they need it, I will. But it's to help them apply this framework that I've just explained to you to their own trading and how they can actually implement it, identify their mistakes, and they can identify their mistake that they can't see for themselves, and build a consistency that doesn't come from watching YouTube videos, okay? If that sounds like where you're at, there's an application link in the description down below. Fill it out. We'll jump on a little discovery call, me and you. And if I genuinely think I can help you, I'll show you what working together will look like. If not, no hard feelings. It is what it is. Either way, I hope this framework helps you trade and with more structure and more confidence. I'll see you guys in the next video. And if you guys want a full detailed JD model video, drop it in the comments below. I'll see what I can do about that. And I'll catch you guys in the next one.